If I have to characterize today's monetary policy in just one line, I would say as follows. It's a pause, not a pivot. Number two, there has been an effective rate increase of 290 basis points over the last 1 year, including the SDF 40 basis points rate increase. And this 290 basis points increase, in fact, has translated to a monetary policy transmission by way of increase in the overnight call rates.
Well, that's the statement of the day. It's a pause, not a pivot, and pivot has the market as well, because we scaled past the level of 17,600, cheered by the statement coming in from the RBI governor, wherein there was a pause in the repo rate hikes, but then we have fizzled out completely, just around the flat line as we speak, around the 17,584 mark. Having said that, the rate sensitives continue to cheer the rate pause. So real estate is the top sectoral gainer, and the auto stocks too are quite excited in the trading session, so they are holding on to gains. Can't say the same about the banking names, because they've completely given up the gains from the highest point of the trading session. So quite a bit of reversal coming in as far as Bank Nifty is concerned, and the financial space too has fizzled the steam a tad bit. But it's weekly options expiry, so a bit of a volatility on account of that is something that we were as it is expecting. FMCG stocks are also in focus. The likes of Dabur as well as D-Mart have failed to enthuse the market with the Q4 updates, and that's the reason that sector is in the red. But then, of course, IT too is in the red, and that's because there's earnings season which is starting next week.
Oh, yes, it is. All focus on IT, a lot of anticipation, a lot of build-ups. In fact, given the Q4 updates which have trickled in, it's clearly, hands down that banking has been a winner, as has been the case with NBFCs as well. So good going, although today's IT is a little bit tempered, but really banks have been the one which have been at the fore all throughout. Not just that, just looking at the market construct as well in terms of individual stocks. And while, of course, banks are doing what they're doing, look at what's happening within the broader end of the market. That's actually where you are seeing bigger moves coming in. IEX is now sitting at almost a 2% gain as we speak right now. And, of course, the transaction fee has been approved now. The move now removes an overhang on the stock. The stock, in any case, has seen a build-up over the last fortnight or so, and now once again giving you a breakout. The change in transaction fee, remember, is going to hurt competition, and that's auguring well for this one. Chola Finance, we saw the Q4 update as well coming in for them. Strong disbursement growth at 20% on a sequential basis, 65% on a year-on-year basis, and broad-based disbursement momentum clearly continues at a total of 21,000 crore rupees. More importantly, the new businesses as well, they constituted to about 22% of their overall disbursement. So that's been auguring well for them. Dabur, that's the other one which is in focus. Let's just bring up that stock price up for you, because unlike what IEX and Chola are doing, Dabur has actually turned out to be a bit of a disappointment given its Q4 numbers, or rather Q4 update, wherein they are expecting the consolidated revenue to report mid-single digit growth. And this at a time when you have seen some outliers from within the FMCG pack. The rural end of the market getting a little bit dampened, and Dabur indicating this kind of commentary, I'm sure, would have a rub-off on the likes of Marico, etc. as well. So Dabur currently down about 4% as we speak. But the index nicely holding around that 17,650 thereabout mark for the Nifty futures. So let's bring on board our experts and figure out what they're making of the trading day so far, considering it's been a truncated week, tomorrow being a trading off. Kunal, consolidating, but does it seem like we're in good stead, and do we have a durable bottom in place?
Yeah, I think, last couple of days have indicated that the markets have gone to different tempo of, price up move. So for initially from 16,800 to 17,200 was more of a ferocious up move. I think in a matter of just, 1 or 2 trading sessions, the markets went up significantly high. You saw the market breadth improving significantly from there on. From 17,500 to current levels of say 17,700, where we tested intraday highs on the index, it's been more of a very slow, steady and a gradual move for the indices. So this variable tempo for the index indicates that the markets are trying to migrate as well as guide it towards the higher zone. The supports have risen up higher for the indices. So from 16,800, which is the major support, it went up to 17,200. Now we are looking out for 17,500 as a strong support for the index. So net, I believe it's a strong market as such. We're trying to absorb as much of volatility as well as events. And if the markets don't see any major kind of correction, it still indicates that it's a healthy market. 17,500 on the Nifty would be a key support to watch out for from a short-term trading point of view.
Naresh, what about the banking index? Because that continues to be fairly fragile, because we saw that it dipped in the red also in between of the trading session, despite that rate pause surprise coming in. Is there any bit of weakness that you're witnessing on Nifty Bank, or continues to be in the buy zone?
So in the bank Nifty, if we notice, we are not seeing a follow-up action in any of the large banks. It's only HDFC Bank, which is actually up 0.7%. We've seen, say, a pullback in SBI, Axis, as well as ICICI. But at the same time, we are seeing a good price action in the real estate pack as well as the NBFC pack. So it tells you that the market is playing that trade of the rate hike pause, suggesting a better time for the rest of the rate sensitives. So overall, some bit of a pause here, and we've seen a good rally in the bank Nifty. So at 41,200 to 41,500, it would be a tough ask for the large caps to do well in the banking space. So time for some bit of a pause. Overall, the structure is still positive. So the view is wait for a little dip to actually start looking into banking names, the large cap banking names, or try to focus more on the NBFCs and say real estate stocks as such. But bank Nifty could take a little bit of a pause, make a range out here at say 40,800 to 41,400 for the near term.
So a bit of a pause when it comes to the bank Nifty, but that brings me to my next question. Real estate pack, as you pointed out, is definitely seeing quite a bit of action today. Let's pull up the Nifty Realty. That's up almost 3%. And the individual movers like Godrej Properties, Oberoi Realty, DLF, Mahindra Lifespace, these are the counters which are up anywhere between 2 to 6, 7%. So all of these counters are buzzing as there is a rate pause, and that's expected to improve the affordability for the real estate as well. Kunal, your take as far as stocks are concerned, which is the best bet?
So, we flagged off, Anisha, two stocks over here in the real estate pack. One was DLF and the other was Anantraj Industries. Anantraj apparently has moved up quite well from 117 to now 130, 132, where the stock is trading. In fact, today the stock made a high of 137 for itself. DLF, I think today has been a classical breakout, and I think right from the word go, specifically post the RBI policy announcement, the stock has managed to break past above 370, 375 as well as the 380 mark. So the three hurdles being broken out for DLF, again a very good, very positive sign for the stock price, and we could now expect the stock to get back into that 400 plus league for itself. So a stock which had been underperforming over the last 3 or 4 months, I think is now getting back into the groove. DLF would still remain to the favorite as well as Anantraj Industries from the pack.
Okay, let's focus on news as well, which is also going to keep our weekend busy perhaps, or today evening. Union Cabinet is all set to meet today as per sources. In fact, the Cabinet may actually consider the Kirit Parikh Committee recommendations on natural gas pricing in today's meeting. Remember, the Oil Ministry has already sent the proposal to the Union and wanted it to be implemented from April 1st. Prakash is here to tell us more about what we can expect from this meeting today.
Yes, the Union Cabinet is well set to meet today, and the sources are informing that the Cabinet may consider Kirit Parikh Committee recommendation in today's meeting. As you are aware, the Oil Ministry has sent this proposal to the Union Cabinet for its approval, and it wanted this report to be implemented from 1st April 2023. But it couldn't be implemented without having a cabinet approval. Eventually, PPSC had to announce, prices for, domestically produced natural gas as per current formula. But it has chosen not to change prices of domestically produced natural gas coming from normal field. It still stands at $8.57 per MMBTU, but it has decided to reduce prices for gas coming from difficult fields from $12.46 to $12.12. However, these are provisional orders. It has been mentioned specifically in PPSC order that the prices of domestically produced natural gas will be announced separately. Now, sources are informing that this proposal is there in the Cabinet for its agenda today, and it is expected that the Cabinet may provide its approval on this report.
Thanks, Prakash, for that. Taking stock of the stocks which are on the back foot as well, it's some of the sugar stocks because we just, reported from agencies that perhaps the export quota is not likely to go up. So the likes of Balrampur Chini, Triveni Engineering, they are seeing a bit of a slide in the last few minutes, and that's because the street was penciling in there might be an upward revision to the export quota. That hasn't happened, so there was a sudden slip in some of these counters as well. The other losers are coming in from the retail and the FMCG space, apart from DMart and Dabur, which are of course reacting to the Q4 updates. You also have Shoppers Stop, which is on the back foot. Varun Beverages is down a good 3%, and then Nykaa too is sitting with a cut of around 4%. Naresh, your take as far as the entire FMCG pack is concerned, will you be a buyer at the current levels in any of the names?
So FMCG as a pack has been pretty sideways. The only one which came up on the radar, which looks very interesting, is Godrej Consumer. That gave a breakout, hit a new 52-week high, has pulled back a bit today also. But that's the only chart which comes up in a big way. The rest of the names have not been showing any momentum. So if we look at a Hindustan Unilever, it's a one day up, one day down stock, which has not been seeing any follow-up price action. Same is the case with the Nestle. Most of these names have been sideways for quite some time. So only Godrej Consumer comes up on a technical radar in the FMCG pack.
Let's get in some stock ideas going as well on that note. Kunal, your closing strategies?
So, Aisha, one of the stocks which I've been initiating long or buy, which is Titan, which is ITC, beg your pardon. So that's a stock which I would look to book profits on. I think 395 to 400 was my initial target range, but I think closer to 390 levels where the stock is trading right now, it seems to be now getting into a bit of an exhaustion kind of a zone. So booking profits on ITC is the closing trade for today.
Naresh, and what about your ideas?
So that's a buy on BHEL. So the worst performing name in the capital good pack. But 68.70 was the recent low in February, as well as the last breakout point when it started a move in October. So risk reward fits really well out here. We've seen a reversal candle today. It has crossed yesterday's high. And that's an indication of a possible reversal here. So keeping a stop loss at 68, expecting a move towards 80 plus in this one.
BHEL, a buy recommendation coming in from Naresh, while ITC is the one where Kunal is suggesting to book profits. But for the markets, let's talk about some more stocks which are buzzing. Ramkrishna Forgings is up around 9%. Remember, it bagged that big order for around 12,000 crores. So the letter of award got signed today. So Ramkrishna Forgings on account of that is up around 10%. M&M Finance, we have been talking about 7% higher. Anupam Rasayan has had a great week. 7% higher on that. NMDC Steel is up 6%. And then if you pull up the weekly chart of IEX, that's up as much as 18 to 20% this week. Of course, the transaction fee is something that we pointed out for you. On the losing side, not many names actually popping up apart from the FMCG majors, and maybe KPIT Tech continues to sulk, so it's just around that 800 rupee mark. So in the meantime, we'll do one thing, we'll slip into a very short break. Nifty is around that 17,600 mark, and we'll track the last 45 minutes of the trading session when we come back.
Back with closing trades right here in 80 now, and ahead of the truncated or rather long weekend, 29 points higher, 17,650 is where the index futures are currently. Bajaj Finance is the one which is really powering up ahead even further, 3% higher as we speak right now. Sandeep Sabharwal as well joins in on the show, and Sandeep, Bajaj Finance after the Q4 updates has clearly gotten a renewed vigor. That, and then of course the status quo policy today too.
Yes, I think after the quarterly update came out, the stock hardly moved, like it was up just around 1% or so. So I think the main fillip which many of the NBFCs have bought is after the RBI MPC policy, where a pause in interest rates, which could mark the peak of the interest rate cycle, is actually much more positive for wholesale borrowers like NBFCs, smaller banks, rather than the larger banks. So I think that's the reason why we see momentum in many of the NBFCs today.
Oh, well, yes, that momentum in NBFCs definitely deserves mention. But Sandeep, your take as far as the real estate pack is concerned, is there a case to be made to buy afresh in these names?
Yeah, so typically the real estate pack on an overall basis, except for a few exceptions, peaked out as the interest rate upcycle started. And for example, something like DLF was, I think, 450 some 18 months back, or 15, 18 months back, and it's lower than that today. And I think a rate was coming at a time when the real estate momentum overall has been pretty decent all around the country. Should be positive for real estate sector as an overall basis. So I think we could see some momentum coming in real estate stocks.
Okay, so that's the take coming in as far as real estate is concerned. But Kunal, wanted your take regarding a couple of these big movers, IEX, which is up around 10%, and from the broader markets, Barbecue Nation is seeing a big spike as well. Anything that you're tracking on the charts?
Something interesting. In fact, Anisha, I think the stock had performed very well from 130 levels to in mid of, or rather end of 2022 was 150. Then the stock corrected very sharply, came back towards 125, which was a huge support for IEX. And from there on, it's recovered quite well, which means that this double test of this mark of 125 for IEX indicates that the stock has formed a formidable base as well as a bottom for itself. My sense is that the stock, even at current levels of 10% higher, it could be a good buy candidate from current levels. In case if the stock provides any kind of a short-term dip, say towards 140 odd mark, that should be taken as an averaging opportunity for the stock. Barbecue Nation, on the other hand, I would still call it as a more of a short covering bounce for the stock, because it was being beaten down significantly from 900 plus levels to I think sub 600. The stock had tested 2 or 3 days back. So it's more of a relief rally for the stock price. The volumes today are also quite strong enough. Now we need to see a change of trend for the stock, where from a pattern of making lower highs and lower lows, does it start to make a pattern of making higher highs and higher bottoms? If that's the case, then we can attribute that for the next 3 to 6 months. It could be a good candidate to accumulate, as and how the stock graduates as well as goes into a minor kind of an upward trend.
Right. Okay, that's the take coming in on some of those QSR names in trade right now. Today, of course, it's really been all about IEX and then Chola Finance as well. Sandeep, quite a few Q4 updates which have been strong, right? So just wanted to understand whether anything has sprung up. I mean, be it a Chola Finance, AU Small, some of these numbers have been quite nice.
Yeah, quarterly up kind of expected that trade growth figures will be decent. Now the key to watch out will be how the profitability comes about, because the last 2 quarters have seen the rate for bulk borrowers who don't have a very strong CASA franchise move up, and and for them the rates will continue to move up going forward, although they will not be able to increase the lending rates. So I think it's not. So I think these updates we need to take with a slight pinch of salt, because a growth in advances does not necessarily need to match the growth in profitability that the company will see.
Okay, so that's the take as far as the NBFC sector is concerned as well. But let's take a look at some of the price volume buzzers as well. It has to be Realty because that's the top sectoral gainer today as well. It's been advancing for 5 consecutive sessions, so maybe the street was already building in this rate pause because we were surprised, but perhaps the Realty stocks were not. Then you have TCNS Clothing, which is gaining traction as well. It's formed the 3 white soldiers pattern. It's surpassed the 50-day moving average and has snapped the 5-month losing streak as well. And then IGL, of course, which is seeing a breakout from the cup and handle pattern. It's a 52-week high on an intraday basis, and the volumes too are on the heavier side, 3 to 4 times the usual earnings that we have seen. Sandeep, your take as far as the city gas distribution space is concerned. They had seen that knee-jerk reaction when the recommendations were not accepted and the prices were status quo. Now we understand the prices, or at least the cabinet is going to mull over the recommendations today. What should one do with these stocks?
I think you're an expert in technical jargon. You said cup and handle, 3 white soldiers, all of that. Not bad. So I think on the city gas front and the regulated sector, I don't buy them so much, because you never know when the government policy changes for what. the gas pricing new regime is also supposed to come out. So we really don't know what's going to happen. So I typically tend to avoid.
Well, it's thanks to Kunal, Nuresh and the team here that they keep on telling us about all of these technical patterns, because we are as clueless as you are, Sandeep, on those things. Just learning as we go, right?
What was that Japanese thing? Kunal?
Ichimoku, or what was it, Kunal?
It's Ichimoku.
Yeah, Ichimoku.
Yeah, still trying to get our way around that one. But anyway, big breakouts in some of these names like IEX. This is something that both Kunal as well as Nuresh also have been extremely bullish on this stock, and a big tearaway move coming in on this one today. There's Astral, there's M&M Finance, Godrej Properties like Anisha highlighted, and then Chola Finance, of course, which is seeing a big move as well, almost an 8% surge on the futures alone coming in. Nuresh, on the charts, Chola Finance?
That has been a surprise in terms of the pace of the move. The stock just has rocketed from 715 just a week back all the way to 840 plus levels. So the problem now is when you've seen a move of almost 15% in a company like this, it becomes difficult to take a trade right now. But clearly a dip closer to 800, 810 would be a buying opportunity. That would be the last 52-week high as well as the major resistance which it crossed. So I think there should be a little bit of a fade off here, but clearly the stock has shown leadership chart pattern. Unlike the rest of the names, this is one of the only names which has actually hit a new 52-week high in the NBFC space. So clearly a stock which you want to buy on dips, and the stock is one of the few also which is at an all-time high. So would wait for a dip to 800, 810. That is the place where you want to get in.
Should one take hazard a guess as to which way the IT earnings are likely to be and build any kind of positions ahead of that? Because the expectations are quite muted. Do you expect there could be some sort of surprise?
Yeah, I would think surprise could be on the downside. So I'm not very bullish on IT stocks at this stage because there is uncertainty, there is delay in decision making. There are banks which are suffering. The financials in the US and Europe, and financials is a big segment for many of these companies. So it's tough to build a bull case, although these stocks have underperformed significantly. So let's see what comes out, how the expectations are, what they guide for, and then we'll take a view after that.
Sandeep, wanted to get your view on KPIT as well, given the recent incident of that downgrade, that knee-jerk reaction in the stock price just when it was, at its 52-week high. What next now?
I think it's in a segment where both visibility is the best among many of the IT companies, but then valuations also matter. So when the overall IT basket is trading at 15, 17 times earnings, the stock goes to 70 times earnings. And obviously it's excessive. So that correction in valuations is happening. And if, like we saw in the case of Tata Elxsi also in the past, if high valuations get combined with some slowdown in growth, then I think the cutback in stock prices can be very significant. So I would think that risk reward is not in favor at these prices. And new investors who don't have the stock should ideally wait out for the results, see the guidance, and then take a call.
So time now to slip into a very short break with the news that 17,600 is being held at the index level, though we are of course off the highest point of the trading session, but it's weekly options expiry and we'll start seeing that move come into play in the next few minutes. So let's quickly take a short break and be right back. Welcome back. So the market holding around the 17,600 mark. IT and FMCG is the one which is on back foot. Sugar stocks have also slipped a tad bit from the highest point of the trading session. And then you have some of the metal names and retail names which are not doing quite well. On the gaining side, NBFCs are doing well. Adani group of stocks is actually doing quite well. And then you have some of the names like IGL, etc., which are in focus apart from the real estate pack. Sandeep, any word as far as the Adani group of stocks is concerned? Which are the top bets, if any, that you would want to recommend?
No, I don't buy the group.
Fair enough. So that's the word coming in as far as the Adani group of stocks is concerned. But what about metals as a space? Because that too has been fairly volatile. But there seems to be, some constructive, word coming in with respect to the steel prices, domestic steel prices with the China reopening theme.
I personally don't think so. I think metals overall will have a subdued period for the next 1 or 2 years as global economies slow down. And even the China's growth revival, if you see the data coming out for the first 2-3 months, is not very exciting. So I think it's important that investors remain more focused on domestic growth focused themes rather than global themes at this stage.
He has to say about pharma, because he as well is going contra and recommends a more broad-based approach now for pharmaceuticals. Let's listen in.
It's a interesting point which you have brought, because we have also seen now pharma sector is now trading in that neglected zone which we generally look forward. Okay, so we exited from September 2020 from pharma. We have been adding some of the pharma names. Okay, so it's not very decisive right now, because in terms of earning potential, it might take a quarter or two more. But if I have to look from a behavior perspective, as we generally look forward, stocks are trading in the neglected zone for a while, or I'll say some of the stock has reached the most hated zone also. Okay, people don't want to even touch pharma names. Rather, majority of the fund houses are actually exiting because they have been holding for these names for a while. So their patience is getting tested. So I think it's a good opportunity, but one has to be very stock specific there, because it's not that we are able to take that call as the sector has reached a bottom and then one should do everything. I think bottom fishing should be done on some of the individual names, and particularly those names which has been in neglected or beaten down and something is or some trigger are expected. Those are the names which we are looking at. We are constructive on the hospital space, but only thing is that we have to look at the valuation. Some of the valuations still very, very stretched. Even some of the diagnostic companies, they have corrected a lot from the higher levels, but they are still not that attractive. So I will selectively, one can participate in the hospital space also, but I'm more constructive on the pharmaceutical, the formulation companies or the APIs company or the CAMS thing. So more focus on the pharma companies rather than the hospitality areas.
Right, Varun Sabu as well joins in on the show right now from Anand Rathi, and to talk about what his opinion is in the markets right now. Varun, hi, good afternoon. Good to have you on the show. Seems like some stability is finally coming back to the market, some reprieve as well, that the RBI has paused, although it's not a pivot, very categorically clarified by the governor as well today. Wanted to understand what are some of the recent house buy calls that you have?
Yeah, hi, thank you again, ET Now, for inviting us, and very happy to come and share our views here. So you're absolutely right that RBI has paused finally, and if you see for the last several times, we are seeing that RBI has been taking the most prudent steps versus all the other central bankers which we see. Basis this event, I think your way of positioning a portfolio changes completely. I think one has to be positive on rate sensitives from here. Particularly, I would say NBFCs has to be the priority in the order. In my view, stocks like Mahindra Finance and certain housing finance companies could be interesting from here. Something like a Canfin Homes, which one should look at, keeping aside the banking pack. I think the rally from here would be more skewed towards NBFCs, which were not performing for a while. I think real estate companies will remain in focus for some time now. We are not sure if the pivot starts, but at least we have paused. So even if we have a perspective in mind that next 6 months, 9 months, we remain here, at least these stocks don't have any negative triggers anymore. And these sectors were under some kind of stress. So I would probably bet more on the rate sensitives one. And second, also, I would be a little more positive on the Indian IT pack, considering that there is too much pessimism which is already built in. So there are a lot of negatives which people keep talking about, how US is shaping up, etc. But if you hear the commentary, particularly after Accenture numbers and the way they spoke about the environment, and also in our interactions with most companies, we don't see that kind of negatives being built in. So I would be more constructive on these spaces rather than being negative overall.
Varun, do you have a house view on Nykaa? What's the recommendation there? Because we got the update, which wasn't looking too bad. Though, of course, in the fashion segment, there was a bit of a slowdown. But now there is more competition coming in from Reliance, etc., as well, coming into the forefront when it comes to the cosmetic space. Your take?
So yeah, my big worry would be Reliance entering the space. And so far there was no competition. So you had no one as a threat, right? And when Reliance has, if you see the track record of Reliance, whenever they enter into an industry, there is some disruption you see across players. We have seen the classic example is what we have seen in the in the telecom space to begin with, and now with the way Geo has been entering into every space that we see. So that is a little bit of a worry. I would probably say to be neutral or avoid Nykaa at current levels.
Neutral or avoid at current levels, but what about the other retail stocks? Because I remember you were quite positive on Arvind Fashions, etc. as well. How does it compare with its peers, Shoppers Stop, etc.?
So I'm very, very positive on Urban Fashion still. See, you have to realize that the kind of brands they have and the way they're progressing on them is very impressive. They have their top six brands. Their key six brands are the ones which are just firing and they're doing so well. So if we see US Polo, if we see Arrow, if we see Tommy, any of them, CK, etc., they're doing exceedingly well. So I don't see any concern related to Reliance entering into retail and that having any impact. And keeping that aside, if you see the kind of ROCs they're making on their individual brands is also very impressive, and the growth rates, etc., that they are seeing versus all other retail players, it's very impressive. So this company had done some restructuring. They had committed some things in 2020, if I remember roughly, to the investor community. They have literally done everything what they had promised. Going to be turning net cash also very soon, cash flow positive. So it's a very, very interesting play available at literally half the valuations of all other players. A very impressive a company. I think at 6-7 times EV EBITDA, you have nothing to lose here. This can be a potential multi-bagger from here.
Also wondering, Varun, as to what could be the other side of a strong competitor or a strong force in the market like a Tira coming in, and what would it then spell for the likes of Nykaa?
Yeah, so my whole worry is the competitive intensity. So far, there was no pressure on pricing. I am just worried how that would play over, what kind of competition you'll see on that front, and the aggression there. So that is the worry which I would be a little aware of, and that's why I'm saying there are much better plays to look at. If you have to play retail, a much better play is Arvind Fashion. So I would suggest to be in there rather than playing anything else.
That's about Nykaa and the retail space, but quickly a word on QSR as well, so that we can complete the entire discretionary spend, take here as well, because the QSR space is also getting heated up. Papa John's is coming into the forefront when it comes to the pizza space. Do you believe competition is going to get heated up there as well, or Jubilant continues to be the leader there?
I think Jubilant is a great play, but unfortunately, in the recent times, you're seeing many other alternatives coming, as you're rightly mentioning. The problem here is that the space is also slowing down to an extent. So we have heard, from our channel checks, etc., what we understand, that things are going quite slow. So we will wait for some pickup to show in the QSR space, and then we really look at any picks over there. But yeah, for the near term, I think there is some time before which one should take entry here.
Come next week, and of course it's going to be full tilt that we're going to take towards the earnings. You've got TCS coming out with its numbers on 12th, Infi on 13th, HDFC Bank on 15th April. So yeah, earnings are going to be hitting us thick and fast. But Anisha, you do track the IT sector. Tell us broadly, what are the expectations from the large cap IT players?
It's going to be a bit muted. At least the revenue growth is something that people are not very, banking big on, because it's going to be a slower quarter. But at least margin will improve on a sequential basis, just marginally so, but something that we're watching out for. Deal win is the thing that I want to watch out for, because the expectation was it's going to slow down, but the numbers from Accenture really surprised us positively, when the book-to-bill had suddenly spiked, and they all talked about how things are actually moving towards large deals. So that will be my focus area this time around, as to whether the large deal momentum continues or not. And then, of course, the commentary from the management regarding FY24 will be very important, because till now they haven't really taken a stance either way. They have been saying that things have been status quo, but since then there has been the debacle of SVB when it comes to US as well, plus a lot of other banking names have been hit through a lot of crisis. So the commentary on that will be really important, but the street is going pretty much muted with the expectations that it's going to be a tepid quarter, but now valuations too have become a lot more comfortable. So very interestingly poised as far as IT is concerned. And I think that will be one sector which the street will be eyeing out very closely when it comes to the earnings season.
Oh yeah, absolutely. Varun, what's your take though? Does it seem like the worst could be in the price or well in the price by now for IT?
So I totally agree that one will have to monitor how the large deal wins would pan out, and also how the commentary for the next year is going to be. The point which I want to highlight over here to your listeners is that there is too much pessimism which is already built in. People have been gravely concerned about how things are shaping up for the US banks, etc. While on the other hand, if we see, there is a lot of resolution which keeps happening. So I would like to highlight, since post Lehman, I remember there is not a single bank whenever it goes down that a government or any of their regulators don't come and save it. So every time there is someone who comes and saves it. So I don't see things to be as gloomy as the street had been painting so far for them. So I don't see that commentary will be too weak in my view. I think commentary would be reasonably decent. And I would be quite optimistic on the IT space versus being negative.
Optimistic on the IT space, but what about the infrastructure sector? And let me bring on board Nuresh as well. Nuresh, apart from L&T, which are the other counters you would recommend from the infrastructure basket?
So, say it has always been about three names in the large caps, which is ABB, Siemens, and L&T. So, out here, ABB tried to give a breakout today, did not sustain well, but that is something which should continue going forward. So, ABB is a fresh 52-week high today. That looks interesting. Apart from that, one can look at, say, BHEL, which is a very surprising one, given the fact that the stock has done nothing for the last few years. But that's a risk-reward trade out here at $70. That could surprise on the upside. Bharat Electronics as well, which is a mix of defense. That is pretty promising. Saw a huge volume bump up. And then one can go towards road infra names, which have clearly shown a lot of resilience as well as performance. So NCC continues to make 52-week high. Today we see HG Infra making a new 52-week high and an all-time high. We saw a breakout in Ahluwalia contracts as well. So the road infra space looks interesting. That is where one could focus on. So at current levels, Ahluwalia contract looks interesting out of the names.
Okay. Interesting take coming in there on a bunch of stocks which are looking ripe for a trade right now. What's not looking out well today is HCL Technologies. That's a laggard in trade. There's, of course, Vedanta, which is ex-div. That's down 5.5%. Dabur after its quarterly update. And I want to, in fact, check in on Marico as well, whether there is any rub-off from what Dabur's Q4 update has been. Yes, Marico as well has been a laggard, about 1% lower for Marico too. Page Industries, Bata. So some of these discretionary spend names are the ones which are actually the laggards in today's trading session. Reliance, after that big bang move coming in on Friday, that hasn't seen much of a follow through. Not the case yesterday, not the case today. It's holding marginally higher, 23.53 thereabouts is where that stock is. SBI less than 1% higher, and then L&T after that big breakout on the stock yesterday. Today too it's seeing a follow through, but not as strong, still holding up 0.6%. Kunal, still tradable on L&T, still a buy?
Yeah, I think it'll still be a buy. Till the time the stock gains momentum, stays above the key support levels, the bias would remain bullish on L&T. We are now talking of the stock, breaking past about the 2,300 mark potentially, and that could also, earmark a fresh lifetime high for L&T. So that's a remarkable comeback for the stock. It has this very odd tendency of, whenever the stock breaks past about the previous highs, it tends to climb up by at least 100, 120 odd rupees in a very short span of time before it gets into a consolidation. The same happened with L&T in the month of January. Even prior to that, in the second half of 2022, we saw a similar pattern for the stock price. So we can expect something very similar, that assuming the stock breaks past about the 2,300 odd mark, we can expect at least a quick 100 to 120 point uptick before the stock settles into a trading range.
coming in on some of these other names as well. But Varun, recently you also came out, the House also came out with a very positive recommendation on Poonawalla FinCorp, wherein you're suggesting an upside of almost 40 to 50%. What's the rationale there?
So we are very positive on fintech, and we remain very positive on an online kind of financials. So that is our thesis, and we believe that they are shaping up to be quite well. And versus how the other traditional players are doing, they would gain a lot of ground, and that their book size also in their favor. So I think this is a great play to look at from here, and it's a great management, by the way, just to highlight.
Okay, so that's the take coming in on Poonawalla FinCorp as well. But as a house view, what are the other top recommendations wherein you see sizable upside or potential multi-baggers?
So as I mentioned to you, interest rate sensitives are the ones which we are very positive on. On the construction side, we are very bullish on PNC, KNR, where we see significant upsides from here, and also HG Infra, which we are very positive on. So our positive stance is on NBFCs from here, real estate, construction, and to an extent IT. So that's what we are being more bullish on.
Right, okay. Varun, also wanted to get your sense in on what you're making of realty right now. You know, I was just looking at the Q4 updates coming in from Phoenix Mills, for that matter, and their footfall data, etc., seems pretty strong. The collection data as well is looking up. That aside, the realty plays, news reports are indicating that rentals have come in much higher and have seen a big jump up in regions like Bangalore. We already know what's happening with markets like Mumbai as well as Delhi and NCR. But would you still have your preference, if at all, towards the low leveraged, low debt balance sheet names when it comes to realty, like a DLF?
Yes, absolutely. We're very positive on DLF also from here. So as I'm mentioning to you, what is acting as a further trigger from here is RBI's move today, which is pausing, and hopefully they start pivoting also, and which will be the big trigger for real estate sector. So there was some concerns which are getting built, because of which the sector had come under pressure, where interest rates were rising. But on the other hand, if on the ground we see business has been stellar, right? If you see the kind of sales that they are reporting, DLF launched that property in Gurgaon, and it got sold in a day, some 8,000 crores worth, right? The kind of sales you're seeing is nowhere reflecting in the stock prices so far. I think there are significant upsides in the real estate side. If we start pivoting, this is the sector to be in.
If we start pivoting, real estate is the sector which can be the maximum beneficiary of that. But let's go across to my colleague Lisa and talk about the dairy sector as well, because India might be looking at importing dairy products like butter and ghee amid supply constraint due to stagnant milk production in FY23. Lisa is joining us with more details on that.
As we know that India is the highest milk producer in the world, contributing around 24% of the global output. But this year, India has seen a stagnant growth in the milk production as against the demand. The demand has clearly outstripped, as it has grown like around 8 to 10%. And the reason for the stagnant milk production was owing to the lumpy disease which affected the cattle and led to their death. So on the back of this, the stocks of butter, ghee, they have fallen to half from last year level. So the government, in order to fill in the supply, they are mulling over importing the products which are mass consumed, that is butter and ghee. If we see that in the last 10 years, they have not imported these kind of products. They have usually imported high-valued products like casein, specialty cheese. So, the reason for the stagnant production has led to the shortage in the milk and also increase in the fodder cost, which have led to increase in the milk prices, and the hikes have been taken by players like Mother Dairy and Amul. They have increased the prices several times this year. The range has been around 15 to 20% this year, and the hikes are expected to continue till September, October this year. So, the government is expected to take a decision after assessing the stockpiles, and as per the sources, they are in advanced stage of importing these mass products of milk items. But they say that the selling prices that will remain in line with the domestic prices, as they don't want to affect the farmers' interest. So, this is a news to watch out for, as this may cool down the already inflated high milk prices.
Well, that's what we are hoping for, because 15% rise in a year is the maximum rise that we have seen in a decade when it comes to the retail milk prices. So some softening there would definitely be welcomed as well. But for the markets, it's pretty much okay. 17,596 has been maintained for now. It's the Sensex which is up a good 140 points, and the broader markets are clearly outperforming today because the mid cap and the small cap index are eking out gains which are higher at than the index level as well. Stock specific, not big movers, but of course Avenue Supermarts is down about 5%, and then a couple of the other FMCG names as we were pointing out. Varun, the valuations on Avenue, do they still look very expensive?
They do actually. So if you see in this current environment where we are struggling for ideas, any company which is trading upwards of 50 times doesn't make sense at all to me. And this is not a time to play growth stocks, right? This is a time to figure out where valuations are comfortable, and you would look at those names. So that's why when I mentioned to you, when I say that in NBFCs, if one has to look at something like a Mahindra Finance, I mean, that gives you a lot of comfort on the valuation front also. So in any space for that matter, one has to look for where comfort in terms of valuations is there. In the current circumstance, we will be in a very different mode once the entire global markets and everything starts moving higher. But right now, the scenario is quite different.
Since we're talking about valuations, will you look at the beaten down sectors, the likes of power, etc. as well, or not getting into the, let's say, the publicly sectored, stocks?
No, I think we will avoid that for now. Our focus will be more, as I mentioned today. I mean, the thesis changes once your rate environment changes, and that's why I'm emphasizing again that we'll be more bullish on the interest rate related companies more, rate sensitives more.
Right. Okay. Let's just see some of the other buzzers in trade and as to what's been holding up. Of course, it's, you can't take your eyes off from what a Godrej Properties, a Chola Finance, or for that matter, what an IEX has been up to. But a couple of other buzzers in trade as well. Adani Enterprises too holding out. There's ABFRL as well, which is looking smart. M&M Finance is looking very smart as well. Oberoi Realty has been holding out very well. There's Canfin Homes, which is looking smart. DLF is seeing a bump up of about almost 4%. There's SBI Cards, LIC Housing, Tata Motors as well, which is holding out well in trade. And then you are seeing a bit of a bounce come in on L&T Finance, on a BHEL as well. These are all stocks which are holding out well as we speak. Having said that, there is a short pile up when it comes to a Bata, Emphasis, Bosch, Techem, ONGC is down, LTIM, UBL, Axis Bank, HCL Technologies, and Page Industries. These are some of the laggards and pressure points as well that you're currently seeing in trade right now. And data has been suggesting that there is a bit of a short covering on an Astral, on an MGL, RT Industries as well. And then HAL, which has had a bit of a choppy ride. Right now it's spiking up again about 1.7% in trade as we speak right now. Kunal, just a couple of buzzers in here. Some of the gas names which have been very active off late, MGL, IGL, both on the charts.
Yeah, I think very excellent charts, Aisha, for both of these names, because these stocks are typically very high beta names. In fact, we've seen so many of the times that these stocks have actually given false breakouts for themselves, and then the correction has been quite, sharp. In fact, just about, I think, last week or so, maybe start of this truncated week, IGL, MGL, as well as Gujarat Gas, these stocks had gone into a correction. So they entered into this week going into a corrective phase, but they are literally exiting this week, going into a breakout mode for themselves. IGL and MGL both tend to be one of the stronger names, at least in terms of the recent chart patterns for themselves. And Gujarat Gas has been an underperformer. But looking at the last 2 weeks of price history, it indicates that the momentum is intact for these names. So I would look to build long positions with these names. IGL could be a preferred bet amongst the gas stocks, the three names which I mentioned.
So that's the word coming in on some of these gas distribution names. Varun, do you have a view on them, or even cement for that matter? What are you expecting from the sector as far as this earnings is concerned?
So one, on the gas names, we are positive. We are more positive on GAIL and GSPL as a house. On the cement side, we remain, if you remember the last conversation also which I had on your show, we had mentioned that we remain quite constructive on the cement space. What is happening there is that you're seeing costs which have come down sharply. So there's going to be EBITDA per ton expansion this quarter, next quarter as well, as per what is happening. So there could be a sharp uptick of 300-350 rupees per ton, which we are expecting to happen this and next quarter. Plus, there have been a lot of efforts by the company to raise prices. Unfortunately, so far it was not sailing through. But what we understand is that so from our channel checks, that there was some price hikes which were attempted last week, and a part of it is sailing through. So we'll get a better sense on that in the next couple of days. But yeah, we remain quite constructive. Irrespective, costs are coming off and EBITDA per ton is shooting up for the sector. Volumes are remaining good here.
Okay. Varun, we'll let you go on that note. Thanks as always for taking the time out and joining
Thank
in.
you so
Have a
much.
good weekend. Let's take some BTST trading ideas before we wind up for the week. And Kunal, what's on your list?
So I'll go for two sell calls over here. Aisha, the first one is a sell on Titan. The stock looking a bit weak on the short-term charts, forming a near-term top for itself. So that's a sell. Targets to be kept at 2,500. Stop loss at 25.75 for Titan. And the second stock would be a sell on Axis Bank. Again, one of the more weaker names from the private sector bankings today. Suggesting a sell. Targets of 820. Stop loss at 870.
Right. Naresh, what about your BTST ideas?
So first would be a buy on BHEL, which is bouncing back from the supports, expecting a quick move here to 72-75 zones, a stop loss at 69. Second is a buy on First Source Solutions Limited FSL, which has seen a strong price and volume jump up in the last 30 minutes. That should follow up towards 115. Would keep a revised stop loss at 110.
Let's see some of the other buzzers too in trade. Bajaj Finance clearly has got to be the best performer, I think, in this week. And this week has just been really 3 trading sessions alone. But yeah, you've seen quite a bit of move coming in on Bajaj Finance. Reliance as well, I won't be surprised given the price action on Monday. That's also, I think, going to go down with one of the best performers this week. Actually, no, it's been very, very tempered. The move
I
in
think
Reliance.
the week has been fairly, I don't know, jaded for us in the sense that it's gone by with a couple of holidays in between, so it just feels disconnected. At least I don't remember.
Yeah,
what was there
I don't
on Monday.
remember whether the move was on Friday or Monday.
Yeah.
Kunal would know that though. Kunal, when was that big move on Reliance?
I think
Even
it was
he's
last week.
jaded.
Yeah.
I think we're all getting into the weekend mode. Do you have big plans lined up, Kunal, for the weekend?
Quite a few.
Quite a few. Wow. Naresh, what about you?
More of a rest weekend.
Rest weekend. Okay, and I think we can all do with some sort of rest ahead of that big earnings season which is lined up. And I'm getting worried about TCS and Infosys in the coming weeks. So I should
Back to back, Anisha.
Yeah, I
you
should
need
kind of-
definitely rest up this weekend. You need it. You need all the firepower next week for sure. Okay, let's just wind up for the day. Kunal, Naresh, we let you guys go on that note. Have a good weekend. Well, closing in pretty much around the session highs, but today has been the most ranged and just very narrow band a day for the market. So just skirting around the 17,600 level for the Nifty spot. The Nifty Bank absolutely flat there as well. 17,647 on the futures. Sectorally, it's really been all about realties. So be it a Godrej Properties, be it Oberoi Realty, DLF, they've all held out. Even ancillaries like a Delta or an Indian Hotels for that matter have really not done bad as well. Also just wanted to get a sense in on what some of the other sector performers have been. So let's just bring up some of the sectoral winners then. And while the Nifty managed to clock in at that 17,600 level in trade, financials too have not looked bad, and largely because of the performance that you've seen on a Bajaj Finance and a Bajaj Finserv as well. Both those stocks go home with a big move. You've got Tata Motors, M&M as well, which have looked well in the green. SBI, Instant Bank, Eicher Motors, HDFC Bank, Reliance Industries, although it ebbed off from the session highs, but managed a 0.5% or so gain. On the flip side, though, it's been ICICI Bank, Britannia, TCS Techem, Axis Bank, Wipro, HCL Technology. So IT has been a rank underperformer today ahead of the earnings, which are going to kick in come next week itself, with both TCS as well as Infosys slated with their earnings. But done for the day, done for the week, and we'll catch you with all the market action on Monday morning now.